Welcome to the Business with Beers podcast. This is the place where we help entrepreneurs expand their business, build their wealth, and generate passive income. I'm your host, Brian Beers, an entrepreneur who's on a mission to inspire growth from everyone around me. Remember that you need to take the actions others won't, and you can live the life that others don't. Please be sure to check out my weekly newsletter that now drops every Thursday. It includes one quote, one tweet, one podcast recommendation, plus some business and investing insight from me. It's short and it's sweet. My goal is to provide you with just a couple gold nuggets to help inspire your growth. Go to brianbeers.com to subscribe. Hello, everyone. I'm excited today to bring you Kenny Rose. Kenny is the founder and CEO of FranShares, a private equity fund that invests into franchises. Welcome to the show, Kenny.
Thank you, Brian. Very good to be here. And I gotta say, we're less of a private equity fund because typically have to be accredited for that, but we're open for everyone to be able to invest in.
Okay. All right. So like crowdfunding.
Yeah, there you go. Equity
crowdfunding. More like crowdfunding. Okay.
Yeah.
Good noted. So so let's kind of take me back to, I don't know, you're 18 years old, you're high school, like a little bit on your journey of how you kind of got to where you are today in the business.
Yeah, it's funny you say that because right before I was 18, I lived in a town that didn't have franchises. So it was a very alien world to me. And eventually I lived in San Diego, went to San Diego State, got my degree in financial services there, and wanted to get into the financial advisory world. So I'd interned at Merrill Lynch on 2 separate runs and ended up going straight from college to being a full-time advisor for them up in the Bay Area, actually. And, I did that for a while and a couple things happened. For one, being in the Bay Area, I saw the invention of robo-advisors coming. And so you kind of got firsthand experience of like, oh, wow, my job's going to be, gone pretty soon. But then also that kind of just the doom and gloom of the big wirehouse stuff. A lot of people just didn't seem happy there. And that didn't really fit my personality. And, I decided to see what else is out there and was talking with a family friend. He's the CEO of a company that coaches CEOs. So obviously a great person to talk to for what's next in life. And then he threw me an absolute curveball and said, well, what do you know about the franchise world? And I had the same thought that I've, dealt with thousands of people since of like, oh, McDonald's, Subway, Taco Bell, that's it. And he said, well, my company's a franchise. And that's what I found out. They have franchises for coaching CEOs, washing windows, car washes, like pretty much any business you can imagine they have a franchise for. So that was my first light bulb moment. And I realized like, wow, this franchise world's a lot bigger than I thought. And I'm pretty educated in finance and business. Like that means there's opportunity. If someone like me doesn't know about it, most people like me don't know about it. And he introduced me to the world of franchise brokerage. And so I was working with the world's largest franchise brokerage. They had 150 offices at the time and started off doing business development. And franchise brokerage is very much like, helping someone understand franchising, recommend specific fits, coach them through the research process, something you're obviously very well versed in. And started off in business development, eventually took over most of LA County for them. And then I got to this point where every convention I was going to, they're doing seminars on stuff I came up with. Even in the corporate training manual, when I went from business development to full broker, I saw that they had used my emails and it's like printed in their training manual. I'm like, wow, I didn't give permission nor receive money for this. And then finally it was, I was a co-author in their Amazon bestseller, More Than Just French Fries, and I don't get royalties from it. So I'm like, okay, I think I'm helping you more than you're helping me now. It's time to go and spread my wings and do my own thing. And, around the same time, a company called Fundrise had just done their Series A round of financing. And Fundrise really allows what was typically only available for accredited investors in private equity, commercial real estate became available for everyone. And so you could invest in real estate for as little as $100. And I started going down this rabbit hole and said, this is what franchising needs, because I kept hearing the same thing over and over during the years, which was either, I don't have 6 or 7 figures of cash laying around, or I don't have the time. I want to keep my full-time job, or, I don't have the right skill set. And I don't think my skills will transfer over. And so that's when, the idea for FranShares was born. And, I wanted to really go out and like build myself as a business owner and a founder. And so I started my own brokerage company called Semphia. And I really focused more on semi-absentee franchises, ones that can be managed by a manager. And I also want to be really a thought leader in the franchise world. Like you are now destroying me. But at the time I felt pretty great about it. But, I had, started off just writing answers on Quora, like the question and answer website. They ended up sending my answers out to over 50 million people on it.
Oh, wow.
And then I, got this like bug for a PR. And so I started reaching out to journalists and eventually got featured in Forbes, ABC, American Express's blog, and then Business Insider actually did an article about my work in the industry. So in total, I reached over 300 million people without any ad spend.
That's awesome.
And so then needless to say, I kind of put the idea for FranShares on the back burner for a bit. I built a good brokerage, life was good. And then the pandemic hit. And it was still actually a great time for brokerage stuff because people, when they tend to leave the corporate world, they want to look at self-employment, and franchising is a great option, obviously. And but then I read this article that people were gambling on the stock market because sports weren't on. And that was my next light bulb moment. I was like, oh my gosh, if I had this company going, I'd have $1 billion in assets under management right now. And so literally just shut down the brokerage and start going off and creating FranShares. And so, FranShares basically being shares of franchises. So anyone can invest into franchising, get that passive income, get the equity ownership, but not have to deal with all the day to day. And so we actually just launched about 2 months ago. After I should back up to last year, we received venture-backed funding. It was led by Chicago Ventures here, where I'm based in Chicago. And they were coming off great investments into Cameo, Spot Hero, M1 Finance. They had 6 or 7 companies turn billion-dollar enterprises that same year. And, so it was great because I'd actually been running into a bit of a slump before where a lot of venture capitalists didn't understand it. They're like, franchising, that's not startup stuff. See ya. And, eventually I said, okay, I'm going to go raise from angel investors instead. And about 3 weeks in, I got 600,000 or 700,000 in investments. And so, okay, now I want to go find the venture companies. And it's amazing. They all answer your calls once you've got cash in the bank for it. They like investing in things they understand or what other people have invested in. And so I reached back out to all these VCs, and basically they all said, it's a great idea. You're clearly the person to do it, but I don't know anything about franchising. And I was like, great, I got to go to find a VC that has franchise experience. And, everyone that I talked to that didn't have that experience, they knew that this could be something really big. And so they wanted to refer me to someone else, and eventually got referred to Chicago Ventures. And, I was talking with their founder and found out that he had rolled up over 500 KFCs to be their largest franchisee and then flipped it to private equity. And so I was like, oh, you get this. It's like, yeah, I get it. And it was just done from there. And then spent the last year developing the platform, the team, and launched about 2 months ago. And we're doing a 25 million portfolio. And this first one's available for accredited investors and institutional. We're about 20 million into it. And then we're launching in January marketplace. So really anyone who's a franchisee looking to expand, or a prospective franchisee, or a franchisor looking for investment can list on our platform. And then we connect them with the crowd of investors, and whether or not you're accredited. So really my grand goal being eventually, I'm in Chicago, we'll have a Chicago fund. So where I go get my hair cut, go eat, go work out, I own a piece of everything. And so I'm actually spending money in things that I own a part of, unlike, my retirement account, which, I could see Walmart stock is great, but I don't really go to Walmart. And versus things I go to every day, I see as a great way to, make money, actually have tangibility in my investments, and also create jobs in the economy here.
Yep. Awesome.
And so, it's been an amazing run already.
Awesome. So, man, lots of questions to ask you.
I saw you writing furiously.
Yeah, I had lots of notes here. I don't know how far I want to go back though. I'll ask a couple of these offline. But so all right, let's get into the FranShares part of it. So, can someone choose, once you have this thing rolling, they have the ability to, they see a post and they'll be able to invest in that specific person's deal, or is they'll see options say, hey, just can he take my money and put it wherever, and it's more of the general slush fund?
Yeah, so a bit of both. So our first portfolio, we did diversified across 2 different brands and a couple different geographies. When the marketplace launches in January, you'll actually be able to see specific deals, understand who the operator is, the financials, the background, the terms of the deal, and you can really assemble your own portfolio. And then later in the year, we'll end up doing we'll manage your money for you and put stuff into these deals.
Gotcha. Okay. And then and I know it can vary, so maybe we can walk a couple different. But so I'm a franchisee. I need capital because I want to go expand into a new market. Do I get to select to make the offer and say, hey, I'm willing to do debt at 10%, or do I have to give up equity, or like what are the different options
We're
that
open
people
to
have?
we're open to debt or equity. Really, because really, I want this to be something that's mutually beneficial for investors and franchisees. If a franchisee says, "Hey, I want to give you 3% interest," I'm like, "Cool." My investors will never go for that. But if it's something that we come to agree on, it's like, "Hey, maybe you just want to do a debt offering. Maybe you're good with the equity side." As long as investors are going to be open and see it as a good investment, then and also that you're a qualified operator, then we'll be able to put on the platform. But we're going to be very strict in our vetting process because we don't want just anyone coming on, and we also don't want to put bad deals out there that people don't want to invest in.
Yeah. So what's that going to look like, the vetting process? Like how you get to know someone's legit? And
So this is part of how I built out my advisory team. Because I like, some people say I like to have one or two business advisors. For me, I said I want one in every different foundational piece of the business, whether it's technology, operations, marketing. But the two big ones from that team that will be helping through that, we have Hans Pusch, who's the founding CEO of the Ampler Group, and they're a 450 location franchisee across a few different brands. And then we also just brought on Jeremy Hirsch from Houlihan Lokey. So they're the number one M&A group in the US or world, I think. And he is actually the co-head of their franchise division. And so, with those two, myself and our director of finance, he's a multi-time billion-dollar plus hedge fund CFO, and also worked for Schroders running alternative asset strategy. We've got a great group that's going to be able to vet both the person, the franchise, and the financials and the deal terms to make sure that, again, we're bringing the best of the best.
Yeah. So what can you get an example of a typical deal, like what you think it'll look like, or at least on the platform, or what your current deal looks like, maybe?
So the current deal's different because that one's not one with existing franchisees, because we're gonna have different stuff between marketplace of, hey, these are all existing businesses, you can invest in those. But I also know a lot in franchising, you make a ton of money by starting from the ground up, new locations of existing brands that have a lot of traction. And I also knew getting things started, you can't go out and find the best deals. Usually when a resale comes to me, I'm wondering okay, why did the customers, employees, friends or family pass on buying this where it could hit the open market? And otherwise you've got to be private equity group that's been doing franchise investing for 20 years. So I said, let's go make the best deal. And then when we're out in public, all the best franchise existing deals will come to us. And so we started with a growth fund. And so this one is, it's going to be 55 locations between two different brands, and they're very different industries. So we've got a little less than half in a brand called Teriyaki Madness. And, they're the biggest competitor to Panda Express. Love QSR, especially with, people like to fight in the war for pennies and burgers and fries. But, I look at quick service as higher margin. And also when you have proven market, but also not a lot of competition, that's a great spot there. Their CEO, Michael Haith, is also just a franchise guru. He's brought a couple brands up to a few hundred locations and then sold to private equity. And, bought this when I think they were 20 locations. And now they're, like I said, 350 plus open or in development.
Yeah, they do well too. I was looking at them the other day, of a strong average unit volume.
Business. Yeah. And so with them, we're actually working with existing franchisees too. So, these ones that kind of have these capital constraints where they've already opened a couple locations, but they don't have that capital to go open 10 more. And so we get to come in and partner with them on that. So you've got these existing operators with new locations, and that way you get to see the equity growth and get that income side of things. And then the other side of it, I wanted to show how wide the world of franchising is and how it's not all food. And so we got into a brand called Smash My Trash, which is also one of my favorite franchises I've ever seen. It's I think about anything in commercial space, whether it's construction, manufacturing, distribution. They've all got those giant commercial dumpsters out back. And so they rolled this giant truck up with a 2-ton steel drum, mash everything down so that the business owner can keep filling it back up. So you got repeat B2B sales. And they've done, I think it's over 600 locations in the last 4 years. So just monstrosity. And we got to lock up some of the best last territory available with them.
Is it all sold out pretty much?
Pretty much, yeah.
Okay.
Because we got LA, Seattle area, New Orleans, and the state of Rhode Island. And trying to go through their map of what I would like. It was very.
And all of those are still in development now, or haven't started yet?
About to be in development because we're wrapping up the funding.
Okay.
And
so from that, if you don't mind.
Yeah.
So you guys, so you raised the money, the 25 million. Part of that money, if I correct me if I'm wrong here, but he's going pretty much to establishing new locations in both of these, helping Teriyaki Madness expand existing locations.
Mm-hmm.
Sounds like not you guys opening those, right?
Not those.
And then
ones.
Smash My Trash, though, that's going to be you guys and your executive team who have like decades of experience in franchising are going to go and open up these 7 markets or whatever it is.
Yep, exactly.
Each one from scratch.
Yep.
So what does that look like? Like, I mean, is there an ops guy who's then going to go and I'm trying to wrap my head around like,
yeah.
So you're in Chicago, you're going to open up all over the country and
so we're bringing on both like a senior executive that's going to like oversee both that and all other franchise investments coming on board, but then also building out a team for the fund itself. And part of the reason I chose these 2 franchises was from a point of manageability. We want to do new locations, but we don't want to spread ourselves too thin with something that requires a certain amount of employees. So the Teriyaki Madness side, that would have more employees, but we're working with existing owners,
partners there. Yeah.
And then with Smash My Trash, they're a very low employee headcount business. They generally most of the owners run it on the side, and they have 2 employees or maybe 3. They have someone selling the deals, one driving the truck, and then a part-time maintenance guy. And so when you're looking at like, hey, I want to build out a big infrastructure, that's a much smaller employee headcount to do that with. And also most of their franchisees don't even have a GM. And so part of why they were able to, lock up these territories for me, because they don't lock up territories like that normally. But I told them I want to build this out with the strongest foundation possible. We're going to have a nationwide GM, regional GMs, and then also like we want to overpay for salespeople. Like we don't want to do these 30 or 40,000 plus commission guys. We want to get 100,000 plus commission guy, because then we'll be able to actually go, overinvest in the infrastructure, because it's such a high margin business. It's like, I think it's 70% net profit margins. So it's like the room's there to invest to then build up a bigger business. And this is what they're hoping more of their franchisees will do. Because a lot of them are just they look towards, how do I get soonest to cash flow positive, not biggest cash flow positive.
Gotcha. So you're going to take a loss for whatever period of time. By investing in the sales and higher quality talent, it sounds like, in order to try to get the speed to scale.
Exactly. And we it was funny when a lot of people were looking at like our target returns and stuff, and they were just like, these seem low for what I see for like what locations normally do. And I said, well, yeah, for one, I wanted to extend the time to ramp it up to 4 years to get like to those like average target returns that they typically have. Both of their franchisors laughed at me when I said that, but because they're like, it's quicker to do that for all their franchises. But I said, under promise, over deliver. You'll hear me say that 1,000 times over. So
what do you expect those to make?
We're targeting 16 to 21% IRR. So it's about 10 to 12% as income, and then we have 9 to 14 annually as appreciation.
Okay, and that's for this fund.
Yeah.
Okay, which is a split between these 2 concepts.
Yeah.
Gotcha. Okay. And then how are you guys, as the operators of Smash My Trash, making money? Is it through management fees, or is it the split, or like, what does that look like?
Yeah. So for this first one, I wanted to prove that people want to invest in franchising. And I was like, hey, let's reduce the fees as much as possible in order to really increase people's drive to get in there. Especially you're a newer company, it's a big fund. We want to make it a no-brainer for investors. So we actually don't charge a fee on this one. What we do instead is I took from my background in the brokerage industry, and it doesn't cost your potential franchisee any money to work with a broker. I definitely encourage people to do it. And so what we did was I said, well, why don't we register ourselves as the broker and the fund as the franchisee? So basically we referred to ourselves and use that commission money as our buy-in into the fund. So instead of charging 1% annually, we're 2% equity owners just by investing that money that would have come in the form of a commission. Once the marketplace opens, though, we'll be doing kind of like your 1.5% of assets under management and 20% performance carry. So kind of like the private equity model, just available to everyone.
So then all the cash flow of like the Smash My Trash thing is owned by the fund?
Yeah.
Okay. Versus it being this separate thing that owns a piece of it that the fund's getting a portion of it.
Yeah.
Okay. Cool. All right. Well, hopefully we can get it growing. I mean, it's a cool business model. I know a franchisee who's in that business personally, and he started from scratch, and its sales are growing, and
love it.
He's doing well. So yeah, definitely interesting business model. So how do you plan on, I guess, getting franchisees to buy in, like the marketing side of it? Because, you know, the concept of, hey, I'm going to go and get get my hair cut in the hoagie place and whatever. I mean, that'd be a huge amount of people you'd have to get on board, right? To have that make sense for them. So
are you talking about for the franchisees to come on board?
Yeah. To join your fund, to want to get money from you.
Yeah. So for one, interest rates are extremely high. And so, a lot of people are looking at alternative ways to finance things. Another is I definitely see as we produce more, people really see the benefit of working with our investors, where I see our dollars invested are more profitable for them than like private equity. The reason is that look at Reddit versus Wall Street last year. You saw that the crowd can really move the needle. And so I want to bring that to the franchise world. Instead of like, you've got your businesses, but you're the boots on the ground. You're the guy, or you're in like some of your managers are the ones who are there telling people, hey, you should come to my location, in addition to like the general marketing. But as far as like who's telling people, it's your customers and you guys.
Yep.
I want to change that from one or a handful of people to hundreds or thousands. So you have local investors. And so they are built-in employees. They are built-in evangelists. They're going to tell everyone to go to those locations because they're a co-owner of it. It's that pride of ownership and actual tangibility there. And also because when it comes to like who's investing in it, I'm not a Wall Street guy. I'm a franchise guy. I'm getting my certified franchise executive designation, doing my last class next month. So normally it takes you like 5 years plus. And, I went through all the application stuff. And I've been in the industry almost 10 years. And so I know how to speak to franchisees a lot better than just from the numbers side. And also people just seem to really get it as like an alternative means. If you're going to a bank and, you already got a loan for 3 locations or 5 locations and, you're paying that back, but frankly, you've got the infrastructure set up to do more. A bank's going to look at you and say, well, we gave you this loan already. Versus we look at you and say, wow, you built all this infrastructure. We want to partner with you and pour some gasoline on that fire and take you to the next level. And so we've already had, everything from a couple hundred location franchisees to 1,000 location franchisors. I'm actually in the middle of putting all our deals together to, start that vetting process for the marketplace. But I think we have at least 50 that have come to us already. And this is before like we've started doing our outbound stuff.
And how much equity are they? I know it ranges, but how much these ones that are talking to you initially? Is it a 10%, 20%, 30%? Like how much?
It's gonna range between all of those. Like obviously we don't want to dilute anyone too much, and they don't want to either, obviously. Yeah. So again, it really depends on what the business is at and how much they're willing to part with. Again, we're very flexible on terms because we want it to work for them. We don't want it to be like, hey, here's how it works, get in or get out.
Yeah.
We want to work with them, and we're going to be honest with them and say like, hey, investors don't want that. Or, that's actually why like our investment committee is working with all of these potential deals first to see like what could work best for them and, work from there, because I don't want to tell someone what it is. I want to see like, hey, how would you like your business to grow? And plus now I've got advisors who've done this on massive scales that can bring best practices of what has worked for other larger operations to that.
Okay. And as part of joining like you guys from the franchisee's perspective, some of this coaching and advice and guidance, like is there like because you got all these guys like on your board, like is that part of the game too?
Really? Yeah, we want to share best practices and make sure that they're getting investments that are going to really help them grow. It's if you do something that's too advantageous to the investor, then the franchisee is going to suffer, which then makes the investor suffer, and vice versa. So those two especially have had amazing success in like working those deals out. And so we want to make sure that we're bringing that same type of structure to franchisees of all sizes, whether you're that one that wants to get to 5 or the 5 that wants to start rolling up more other locations, or you're that 30 location guy that wants to get to 100. We want to be able to support and be customized for everyone.
Okay. Shifting topics a little bit, what's your take on like, emerging brands versus legacy brands? And you've got, it sounds like both. In a concept, you're investing in new locations, legacy brands, but Smash My Trash is an emerging brand. So like,
yeah,
kind of how do you weigh the pros and the cons, or how do you take an emerging brand and really determine, hey, this is worth it and to reduce your risks?
It's really tough because like I feel like from a franchisee side, everyone wants to be on the legacy brands. For obvious reasons, you've much longer track record. They've worked everything out.
Yep.
Emerging, you get the benefit of, if from the franchisee side, hey, I can go get the best territory. I can have a voice in this and help, work with them.
Yep.
But if you're like much more of a plug and play type person and you just want to like get the rule book and say, thanks, I'm going to stick to it, merging is going to be a bit tougher for you because you're not going to want to contribute different stuff necessarily. You're like, that's for other people to figure out. I came to get the playbook, not to help write it. And so, but from our perspective, what we really want to do is start investing in emerging franchisors themselves, because we see there's a very big gap between where private equity tends to come in. They're looking like when franchisors are like 50 locations plus. Yeah. But especially when you're in that 20 to 50 range, man, there is some gold in there. And honestly, again, that's ones where you can pour gasoline on that and watch them go. But they're overlooked by private equity. It's also because like they're trying to deploy massive amounts. Hey, if an emerging brand wants 5 or 10 million, I've got investors that are going to be happy to put that money in there. And that's going to increase their odds of success. So it's kind of tough because I also don't mess with emerging franchises when they're too early, if they're, especially when they're under 100 locations, under 20 locations. Yeah. It's really tough to see, like, are they going to be the one? Yeah. And frankly, that's also like how you can see a management team and what they're made of is like, can you get it there?
So what's your criteria? So you're going to look to invest for, it's like the personal angle, let alone the franchisees, but like for you guys, you're going to say, hey, they got to have at least 20 locations. Like that's kind of enough of like a proof of concept to at least open the conversations up. And then from there, like how, I guess, is it they got to have the secret sauce? Like there's got to be some sort of special competitive advantage that makes it unique. Like walk me through some of the things that, like, you must have a checklist, right? Or something you're going off of.
Competitive advantage for sure. Like let's look at your top competitors. Why are customers going to go to you? You also, financials is obviously huge. Like we need to know how our investors going to make money and how. You also want to see the leadership team. That's a huge part to me. Yep. It's, how invested are they? What's their experience, whether it's in franchising or in their industry? You could be a great franchise person, but then you don't really know that industry well enough to really take it off. You can be a great industry person, but you don't know how to sell a franchise, and so you can't grow the locations. And it's also looking at how they're strategically planning on developing all that. Are you working with like a franchise development company that's going to take you from that 10 to 50 locations, or are you just saying like, oh, my business is that great, so I'm going to do it? And hey, it very well could be, but also there's a lot of times it's not. And so you got to see, like, are they open to that? What are they, how are they going to?
You'd want to see that. You'd want them to see work with one of the franchise, Fastlane or whoever.
I do like when they do, because frankly, like there's a reason they exist. They help brands grow very fast and very big. But
and for my like knowledge, that's like outsourcing the sales team and the franchise development portion. So they're going to take all the calls and know how to handle probably help with the marketing, right? Like, and then once it's sold, then the ball gets kind of passed to then the core team, who then is focused more on operations, kind of thing.
Hey, can you hear me?
Yeah, sorry.
Sorry, internet kind of cut
out. Froze. I was like, he's all tongue tied.
Yeah. No, such a good question. So they are the outsourced like franchise sales arm, which is why I like it, because frankly, like, I mean, we'll use Smash My Trash as an example. They are great at building their business system and their processes. That doesn't mean that they are experts at selling franchises, because that's not what they do. They smash trash. Yeah. And so that's why they work with outside groups like that they know how to sell franchises. And so that's where I like it, because they're there to help them grow until they're able to start bringing people in-house when it's at the right time. And so, but on the other side, we definitely want to make sure that they're really able to grow those businesses over years. Like if you're working with the Fastlane, are you still getting that unit growth? Are the units growing themselves? So,
What about, are you looking at, if we're going into a recession for X amount of months or years or who knows, are there certain concepts or industries you're staying away from, or some that you're like really attracted to?
Well, I mean, even before recessions, I try and stay away from things that are like fads. It's funny. This is not going to be a popular opinion, but like, I'll say something like a crumble cookie. I mean, people are losing their minds over crumble. But again, I see it as like, hey, if we go in a sharp downturn, no one's going to want a $7 cookie. Yeah. Versus
Froyo. Froyo was like huge 7 years ago. Like every place there's a Froyo place popping up. Yeah. Now, like I think they're all closed. Like,
yep. And so that's why I like things like hair care, automotive, fitness, things that like are more need-based businesses, service-based businesses I especially love. They tend to be a lot higher margin. But yeah, I try and look at like, hey, if someone doesn't have $10 or they're choosing between this and like eating, like, are they going to go?
What about like, I don't know, house painting? It's like, or like, I mean, I
Yeah.
get blinds, like maybe people aren't gonna do their blinds or window clean. Is painting something? I guess it depends if, whatever, they gotta
Well,
move or
see,
maybe.
painting is one of those ones where it's really more of an owner operator business typically, and so that's typically not something that like we want to hop in as much from like if we're creating a diversified fund. But if we're looking at a franchisee that like has maybe they've kicked ass at it for 5 years, there's industries that can survive and there's operators that can survive. You could have the best franchise ever, but if you are not the right operator, you're not going to survive a recession. Whereas also you could have a, not a great franchise system, but if you're a great operator and you know how to turn the dials, you can survive and thrive.
Yep.
So that's why every deal
that one is kind of like borderline, I think, on the where it falls. And then what about, so can you get into your definitions of the owner operator versus like the semi-absentee versus executive? Because like a lot of people throw that at, right? The owner operator, like, am I an owner operator? Like I own the business, I work on it, but like I don't spend a tremendous amount of time versus like the guy in the truck.
Yeah.
Right. So like, so what's your definition? When you say, hey, owner operator, like what's his day-to-day look like?
Yeah, well, I put the emphasis on the term operator. They're going in that well, it depends on the type.
Like he's a W-2 employee or could be a W-2 employee doing someone's job, right?
Yeah.
That's like his job. The things he are doing is critical to like turn the cash register.
Yeah, okay. Exactly. They're really in there. They're working with customers all the time, performing services.
Selling jobs, like smash my trash. He's selling jobs. He's managing the route. Or one of these things, or he's smashing the trash, right?
Yeah.
Okay.
Yeah. Another good test is, do they have another job? I think that's like kind of the big thing between like the owner operator and the semi-absentee is if they have a day job and they manage this as an investment in addition to it, that's semi-absentee. For someone like you're one of the super rare ones where it's like you built a massive business out of this. And so that way, like, you could be, that's what I'd call you the executive, where it's like, you're an owner operator, but you're overseeing a massive operation. You're not in the doors of everything, but franchising is your business.
Yep.
Semi-absentee is, I do other things. This is one of the things I do.
Gotcha. So is after owner operator is the next then semi-absentee? Or is there something in between in terms of being like you're in a leadership role? Like you have everyone who does the day to day. You're working more on like whatever, building relationships, driving profitability, trying to like, you're writing and, doing sales calls once a week.
I would say a master franchisee or a master franchisee is kind of like that in between, I would think, where it's like you work in that business. That business is yours, but you're not in the day to day. You're helping assist others and like work with other owners to grow their businesses. So I think that would be my like kind of in between,
like some sort of like developer kind of side of it. Okay, because that's where I think a lot of people, at least that I talk to, that's kind of where they want to be, right? Obviously, many of them don't want to be the owner operator, but they want to run the business. They want to like be involved in it. They don't want to be totally absent on it, but they're in like a leadership role, right?
Yeah. Well, it comes with also like how you're investing in the company too, because I think a lot of people want to do that, but then they want to cheap out on like who managers that they're bringing in, and like whether it's salary or equity, they're like trying to be cheap about it. It's like, hey, if you're trying to build that business, you need to go invest in that foundation and those people. So I think that's why a lot of people want to do it, but then it's hard to, and also only so many franchises offer the ability to. And then it's like, some people might jump at like, oh, that franchise offers me the ability to, and they overlook, should I be doing this franchise to begin with? Or is it just that they have a good opportunity for me?
And then semi-absentee would be kind of the next level where now like maybe you have a leadership guy in the leadership role and, spending less time like interacting with anybody related to it, right? Is that kind of, and maybe you own maybe you have a couple different things you're owning and kind of asset managing in a sense at a small scale.
Yeah, really is. Yeah. You're not really working with all the employees as much. It's really just more the leadership team there. You're overseeing and, making sure everything's working right. Yep.
It's funny because like in small, but an independent small business, they don't really have these like terms, right? It's just like you're the business owner.
Yeah.
Right. And that's how I view it. I'm just like, I'm just, my brother and I, we just own the company. Like, I don't know. Now I'm like trying to figure out what bucket I fall in, but
well, that's the great thing about the franchise world is we don't fall in a lot of the same buckets as 99% of people. Cause like most people don't understand franchising and it's just like such a big,
or and it's, you can make it anything you want. Like even in Midas, there's people I know who have a full-time W-2 job and they own like 1 or 2 stores, and they make a little bit of money, but like, we look at the P&L and the margins, are half of what they should be. Like, we could double on the same sales just by fine tuning things. Right. And then you get the people who like, or the next step, they're the owner operator. Like they manage the store. They work 5 or 6 days a week and like they burn themselves into the ground. And then you've got the people who then they own, maybe 3 or 4 stores, and then all of them kind of report up to the owner, and they're kind of like the district manager in a sense, or how we would call it. And then you've got like the people who've got, 10 stores or 15 stores, and they have 2 district managers and report to them. And then me, at kind of the next level, and there's guys above me that have 100, right? And regional directors and all this stuff. But it's the same concept. It's the same exact brand. It's, it's Midas, but people can, like, depending on how they want to interact and how much time they want to, and what kind of returns they want and what kind of problems they want to deal with, can make it anything they want. And that's what
they really can. That's the really
what's cool about franchising. It can really be, it depends on the brand, but a lot of brands can be anything you want them to be.
Yeah. And there's definitely plenty that are just like, no, you can really only do 1 or 2 locations. We don't want people doing more than that, or they just know that you'll fail, and so they don't even offer it.
Yeah. And there's others that promote, multi-unit, they want the growth, they want the scale, and so it's really just kind of finding, what's right for somebody, and then using you guys if they want money to grow it, right?
That's
the plan.
All of them can come to us.
But cool. I appreciate your time today and learning about it. What January should be expected? Okay.
Yeah.
Well, this episode will probably launch somewhere clease to that date. So
maybe I can push
it back. Yeah, there we go. I'm trying to get more podcasts. So where can people learn more about FranShares if they would like to and connect with you?
Yeah, FranShares.com is our website, but connect with me on LinkedIn. I love posting on there. You'll see I got a bunch of good tidbits. So it's just Kenny Rose, like the flower, and then any social media, just at FranShares.
Yep. Awesome. Cool. Thanks again for coming on and sharing your story. And it's been great.
Thanks, Brian. Always a pleasure.
That's all we got for this episode with the Business with Beers podcast. One thing that would really help both us and other new potential listeners is to rate the show and leave a comment in iTunes, Stitcher, wherever you listen. Also, make sure to link up with me on your preferred social media platforms, LinkedIn, Instagram, Twitter, Facebook. You can find all my links at brianbeers.com. Please just share the podcast with anyone who you think might enjoy it. And until next time, remember to take the actions others won't, to live the life that others don't.